Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 227, 13th of May, 13th, Friday the 13th, and there was momentary cheer today before the market gave it back all again. So horrible week. I don't have much good news to share with you this week, entire week, and this has been one of the worst weeks since March 2020, and kind of bringing back home the point that one should always remain practical in terms of what we can lose when we come to the market. These are lessons to be learned by definitely all new players, but even the older ones who may get overconfident and put in a lot of capital at the top of the market. So entry to the market should always be gradual, so that whenever the cycle turns, and I really cannot even say that the cycle has turned, but whenever that cycle turns and comes back, your capital gets distributed over that cycle, so that you don't get any rude shocks. A lot of people have come into the market very late, and that too in lump sum fashion, and those will be the guys who are with the worst hit, unfortunately. But those who have come with the right perspective of riding it out long, of gradually bringing in the capital, I don't think if you've been in the market even for a year or year and a half, you would be not at least be in the red as of now. But nevertheless, the damage is huge. There is no question about it, and it is a bit demoralizing for every investor to sort of see their capital erode, but that's how the market is sometimes. As we can see here, autos, as we were expecting also, autos have done reasonably well. FMCG picked up today, so FMCG and pharma were the two sort of places where capital was heading towards, and banking saw a huge fall in the second half of the day, led by SBI, and metal stocks and commodity stocks have continued their fall. Metals have been the worst hit in the last 1 month, down about 20%, and also banking has been minus 17% on PSU banks over the last 1 month. Commodities minus 14%, real estate minus 17%. So really no place to hide as such, and pretty weak sort of outlook going forward as well. I mean, it's very difficult to say where the market may turn. Today was a chance, but the market gave it all up today. So I think today's top is very significant now. In the next many days, if today's top gets taken out, only then some new momentum can come on the upside. Otherwise, we are still looking at a downward trend on the markets. The slight green on the small cap segment was the only sort of silver lining today. Nifty was down minus 0.16%, Nifty Next 50 down minus 0.5% after Adani stocks got smashed. And mid and small cap were the only sort of areas which were slightly in the green, and this was reflected in several of the mid and small cap strategies also. So MIMT all cap up 2.8%, MI35 up 2.4%, MI20, MI50 all up, MI30 is up. What was falling was NNF10. It had exposure to Adani stocks as well, and that have collapsed today even more. ATH was down minus 0.45%. This is at a cash level of 50%, so the movement in ATH has reduced. MIATH was up very nicely in first half of the day, but gave it all up. Evergreen has also been down. Gold has not performed as per expectation so far in this fall. MI25 up 0.32%. So some recoveries in some of the strategies, but not all as such. Within this mayhem, some exceptional winners today. So Ratan India plus 20%, PB Fintech plus 17%, Poonawalla plus 15%, Tata Elxsi plus 15%, and Nazara, after getting hit really badly, plus 13%. On the downside, Hudson Agro minus 13, Adani Green, as I mentioned, minus 11%, HLE Glasscoat minus 10, GNFC minus 9, and Indus Towers also minus 9%. So we are now at the 25th episode of Ask Weekend Investing rounds. We've put all these rounds together on the link that will be provided in the description below. You can go and see these answers. Most of the questions and answers are unique. Some of them do come repetitive, but most of them are unique. We try to pick up unique questions. So if you are new to small case, new to weekend investing, I would strongly suggest that you take out some time on the weekend and go through several of these videos, and a lot of your queries will get answered here. We've answered 500 questions now, and this is a huge bank of knowledge that exists on the website. So you can take a look at the Weekend Investing Hub, link of which is also below, and take a look at these. So let's start with 501. Elon Musk, our Indian Elon Musk, is asking, I am a all cap subscriber, quite happy with the product, thank you. However, I feel the strategy erred last Monday when no stock was exited. This led to profits being wiped out. Can you add more risk protection to the strategy like you did in stairs to avoid? So what I can say to this is that we are sticking to the T, to the strategy that we've been following for last 5 or 6 years, and sometimes the losses will happen very suddenly, like this was a very sudden sort of fall week. Sometimes they may happen gradually. Sometimes we may do better than the market, sometimes we'll do worse than the market. So we don't want to curve fit and react to every move and tighten or loosen the strategy, which essentially will basically mean that the non-discretionary nature of the strategy is gone. So there was no erring in terms of following the strategy. Yes, we lost ground, we lost money. Nobody likes to lose. I also don't like to lose. But that's a part of, this strategy. I mean, there are other strategies which exited earlier. There are other strategies which also have not exited any. So, one incidence of this nature will not cause me to, change the strategy. So I will not tweak it. I have not tweaked any strategy so far. So I don't intend to tweak strategies because, market has done something this week particularly. Next question is from Mr. Teja. Any plans to offer discounts by combining strategies on small case headquarters? So we have several plans to do some discounting of in terms of the seniority of years. So if you are continuing the same strategy second year, third year, then we're thinking of offering some discounts based on that. The combination of strategies is something that we have not yet worked out. So also it is logistically a bit difficult to deal with. We have tens of thousands of users, so it's a bit difficult to roll this out. But we are definitely looking at this, and something in the next maybe current quarter or next quarter you should be able to see on this. So this is something that we are actively looking at. Next question is, you have always suggested to stay in the market for long, but this makes sense for mutual funds. How does staying invested in concentrated momentum portfolio give us benefit, because the composition changes anyways about 2 to 3 weeks? So staying invested will give you the opportunity to buy into stocks when the next up move starts. If you are not staying invested, you could, when the stocks go out and when we are going to cash, you could take that cash out and do whatever you like with it if you like. But when it starts to build back the portfolio and stocks start to come in, at least that time you should come back in and build the portfolio. So from that perspective, staying with the strategy whenever it goes long makes sense. But it is not like mutual funds only you can stay long, and for small cases you have to. So I don't agree with this conclusion that you have. I mean, we've had stocks in the strategies for more than a year also. So how does that make a difference? Ritesh has the next question. Hello, Alok sir. I am an investor in all cap for last 9 months. Seeing current market situation, I believe the strategy will move toward liquid Bs cash very soon. Should we keep investing further? So now nobody knows how deep and how long the fall can be. Maybe we will stay muted for the next 6 months, or maybe we'll make a very sharp fall in the next 1 month and then go up, or maybe we've seen the bottom yesterday. So I really can't say what happens next. Now, yes, we will move to more cash as we go towards the rebalance on Monday. There's no doubt about it. But my sense is that you should not try to time the market and just trying to keep allocating money because you don't know how the markets can perform starting any week. At least I would not do that in my personal portfolio. I have a SIP running in a different kind of a strategy, different kind in the sense different from these strategies, but that SIP will continue to get invested every week. My strategy is different because the regulation does not allow me to invest in the same strategy as what I'm referring to the clients. Next question is from AO Naran. Earlier, Invest More algorithm would show me the amount needed to buy all the stocks. Now it shows me an amount between 10 to 20,000. How to get the amount to buy full small case? So I think we've answered this many times in the past also. Small case has changed the algorithm for the Invest More option. What you can do is if you put any amount above 1.5 or 2 lakhs, it will try to buy the entire portfolio because that's where most of the minimum size of most portfolios are. So just change that figure of Invest More amount and it will give you that allocation. Also, whatever Invest More is trying to do is trying to bring your existing portfolio as close as possible to the model portfolio. So even if you, let's say, add 50,000 or add 1 lakh and it need not be the entire amount, it is still bringing you closer to the model portfolio. So I hope that answers your question. Parul is saying, I am currently subscribed to Evergreen and want to invest in other small cases. What will you suggest to add with Evergreen for wealth generation? I am planning to gradually move away from mutual funds and do SIP in small case. Please suggest considering above point. So Evergreen is a strategy which invests in CNX 200 stocks along with exposure to gold. So you could look at adding mid caps, small caps, and there are several strategies around these themes. So MI20 is there, MI35 is there. You could look at all cap strategies. You could look at MI25, small cap also. So MI50, small and mid caps. So several strategies are there which can take you to a different exposure from different from CNX 200 only. Next question. Dr. Anil is asking, the only ray of hope in this testing time is your daily bite. Thank you for such insights. My question is, what is your take on LIC IPO? So thank you so much, sir, for appreciating and giving us more confidence for running our Daily Bytes series. My sense on any IPO is that 99% of the time IPOs are done so that very smart investors can offload their shares to the public. So while some IPOs do very well, there's no question about it. My sense is that most IPOs, at least more than 50%, if not more, will not result in positive outcome for the retail investors because there are these smart, let's say for instance, any of these new age companies that have come. I mean, there were venture capitalists in these companies and then private equity also came in, and all these are very sharp hawks and then the promoter and these smart guys, they want to offload some share. Do you think they're going to offload at some cheap price? It usually does not happen that way. I mean, that's how the world is built up. So I am very wary about investing in IPOs. Yes, after listing, if you are able to find value, and I am probably the wrong person for a value discussion, only then maybe you should take a call on an IPO, even if that means losing few percent, 20-30% on an IPO, but at least you will be sure once you have that value proposition. Or if you want to take a momentum call, then even if you buy in an IPO and let's say the stock opens up, but in 2-3 days time itself, if the stock is starting to close at all time lows, even within that short time frame, you should get wary about this, because a stock which cannot hold its ground is likely to fall, and we've seen this in so many cases. I mean, it will just fall. So either you can wait for the stock to stabilize after IPO, maybe 15 days, 30 days, and then once it starts to breach its highs, then you can take, if you want to see from a momentum perspective. Next one is from Ravi Teja. Is it advisable to bring in more money into NNF10 during the falling market, or stay put and invest once the runs start upwards? I have this doubt that it's the momentum strategy. So again, this is trying to time the market. So if you are reasonably good at timing the market, you can wait for the markets to start turning up. If you don't want to second guess the market, then you could bring it in a SIP format, weekly, monthly, whatever you may be doing, and not worry about it and let the system take care of it on its own. I mean, I do that, so I can suggest that others can also do it. But if you wish, you may plot the NNF10 curve, and you can plot a moving average on it, and maybe you can do some sort of analysis on it, and only once you see that the index starts to move up, you can come in with more capital. So all kinds of things are possible. Next one is from Ashok. During the downfall also, do you suggest doing monthly SIPs in MI20, given the portfolio is going down daily and we are realizing losses in all rebalances? So my suggestion is never stop SIP. Please continue the SIP. The portfolio may go down for some time. Today, incidentally, it was up nicely, but the portfolio design is such that during falls or even during rise, it will exit stocks with small losses, and it will try to make larger gains on the few stocks that it will make money on. So over a period of time, over a period of a cycle, you will be able to see those gains. So my suggestion would be not to stop SIPs. Sandeep is asking, I hedge my entire portfolio with gold in the form of SGBs. Is it possible to get a copy of Mi Evergreen minus the gold, as I don't want additional gold piece? I understand performance reporting for strategy can continue including gold. So I am not sure if what do you mean by getting a copy, because when you log into your small case Evergreen portfolio, you are able to see the allocation. What you can do is you can create a private small case and have that allocation pasted there minus the gold, and you can run that small case at your end, and as and when there is a change in the Evergreen small case, you can make the change in your private small case. So it's possible to do it, but I will not be able to provide that as that is not feasible for me to do. Next one is from MK. There has been a recent SEBI ruling on one another small case operating with the RA license. Can you please clarify implications for weekend investors? So let me clarify that the recent SEBI ruling was for a operation which had nothing to do with small case. Yes, he was holding a RA license, but he was doing PMS services in that operation, and there were several other irregularities that the SEBI has found. We have taken a legal advice, and we are in compliance with all RA license requirements. So as of now, we see no need for any worry or any implication for any RA-led small case manager. We are in constant talks with small case also. We are taking further legal opinions also. So if there is any change in that stance, we will definitely come out and let you know. But so far as I know, we are totally in compliance with our license. Financial Guruji is saying how to track all charges like STT, stamp duty and other transaction charges incurred in a small case. I would say go to your broker's report and see these transactions. They are available on most brokers, and if you do the sort of a analysis of, at least in Zerodha I know, if you download that report, it will give you a consolidated figure for each head. How much you paid for STT, how much you paid for SEBI transaction tax, how much you paid for NSE turnover tax, etc., etc. I have subscribed to multiple WA small cases, so can't track from broker statement. So you can't track from broker's ledger, but you can track from the consolidated expense that they tell you, and then you can just plug in that expense in your XIRR sheet if you are calculating. So this is the end of all the questions we had today. We surprisingly had lesser number of questions today, but I suppose the market has made people so distressed that they don't even want to ask questions. Anyhow, so I am thankful that you are listening and watching these videos. These are very important weekend investing rounds, where even if one question that you may have had in the back of your mind gets answered, I mean, that's one step forward in your learning curve. So it's good that if you are watching this and also share this with other weekend investors or other small case users if they can find any value in this. So thank you so much, and goodbye.